All right, all right. Hello, everyone. Seems like we're live. Give me just a few minutes. Just sending it out everywhere. The announcement that we are in fact live. Thumbs up in the chat if you can see my screen. Should be able to. All right, all right. Somebody says there's an echo in chat. Oh, yes, sir. All good. Okay. Seems like we're good. All right. Welcome, everyone. Not a great week for crypto. Also, not a great week for Brian, our team member that's usually on these calls with me. He caught a bug. We wish him all the best and a very speedy recovery. So it's just going to be me and Maksim, our founder, today. Mostly it's going to be me talking. So I hope you're ready for about 30 minutes of me talking about the markets. And then after that, I'm just going to let you guys ask me questions. So you can actually just, or if you have questions already, anything about the market or about specific coins that you want me and Maxim to look at after our initial analysis, just let us know in the comments. This might be a bit of a shorter stream simply because I don't know if I can talk for a full hour without interruptions. It's probably going to kill my voice because I need to shout a little bit because my mic isn't necessarily the best. So I'll do my best, but keep that in mind as well. All right, cool. So as the title of the video suggests, today we are going to mostly be looking at Bitcoin, but we're also going to look at Ethereum and a few altcoins. That being said, it's pretty clear that everything currently is Bitcoin related, and whatever the top dog does, it's going to ripple through the rest of the market. So in the next 15 or 20 minutes, I'm going to look at a bunch of different Bitcoin metrics. We're going to start with off-chain indicators. We're going to start with derivative data and social media data. And then we're going to look at exchange information, the amount of sell-side pressure, what are the long-term holders doing, what are the whales doing, whether people are selling, taking profits, whether Bitcoin is over or undervalued according to a bunch of different on-chain indicators. All right, so that's going to be a setup of how we try to figure out where Bitcoin is at the moment and what metrics you should keep an eye on for the future. So if you don't already have an account, make sure to go to app.santiment.net and you'll be able to get a 2-week trial to test everything that I'm going to show you today. All of the metrics, there's a 2-week trial where you can test the entire platform for free. And then afterwards, it's just 49 bucks a month, which I think is probably the most affordable of on-chain packages that you're going to find around. So definitely try and take advantage of it. All right. Okay, cool. Let's start with off-chain indicators. So one of the things that I wrote about a few days ago was this funding rate or derivative data for Bitcoin starting to take a massive downturn. So I'll show it to you here. This is what I wrote a few days ago. We saw as Bitcoin started to correct, we saw a massive dip in the BitMEX's perpetual contract funding rate. So for those of you that are unfamiliar with this metric, and you can find it here, the funding rate is a fee that is paid by one side of the perpetual contract to another. When the funding rate is high, that means that Bitcoin longs are paying Bitcoin shorts. When the funding rate is low, it's the opposite, right? So in general, these high spikes in Bitcoin funding rate suggest that the market is overall fairly bullish on average. So if I look at the last 3 months of Bitcoin's perpetual contract funding rate data on BitMEX, and let me take off the axis here, you'll see that this is the first time since basically early February that we have kind of went down to 0.01%, which is kind of the ambivalent territory. So it's the first time in almost a month that the general sentiment or trend of derivative traders has gone from overwhelmingly bullish to, on average, fairly bearish. Now, if you look at historical trends for this metric, and I know sometimes in the past when I talk about funding rate, there's a few people saying that funding rate works differently in bull market and bear markets. Completely agree. So take all of this with a grain of salt. That being said, in general, the trend has been that in the past, when the funding rate for Bitcoin tends to dip into the negative territory, it does seem to suggest undervalued conditions and might, have a stronger propensity for recovery. So we've seen this both during the Bitcoin's local bottoms here. Actually, local bottoms, 2021 bottoms for Bitcoin in late January, both here and here. We saw the first sort of forays of derivatives or funding rate into the negative territory, suggesting that actually shorts were now dominating Bitcoin longs. And in general, the market has completely flipped on its head, right? We're not there yet. We're currently sort of in the middle of the pack. However, in the previous bull runs and in the previous sort of price recoveries, we have seen these major drop-offs in funding rate seem to coincide with potential for price recovery. So it's one thing that I would definitely keep an eye on in the next couple of days, is the fact that while Bitcoin's funding rate is still slightly in the positive, if we see another wave down, or even if it continues to consolidate, I wouldn't be too surprised that we see another sort of dip into negative territory. So I show this quite often, but let me show you what happened during the summer. So in the summer, we've had two sort of, actually three major spikes in Bitcoin's funding rate. The first one was when we finally crossed the 11K mark, and almost immediately the price volatility began and we had a month-long consolidation period. The second massive spike in funding rate was at the summer top of 12 point, I think it was 2 or 3K. And immediately we needed to sort of normalize these levels and went into a correction. And then the third time that we had this massive spike, or significant spike, in BitMEX's funding rate was on September 1st, before the market-wide correction. And then what you can see is we had a period of generally undervalued or sort of underwater funding rate, suggesting that on average, after the market-wide correction, the market has flipped on its head. Sorry. Like I said, it's going to be a challenge for me to talk for an hour. So the market has flipped on its head. And it was the first sign that we might start to recover. So massive spike in funding, or sorry, massive dip in funding rate here. And then really another massive dip in funding rate as a lot of derivatives traders were giving up on Bitcoin before we were finally able to recover. I think this was also sort of a short squeeze as well, right? A lot of people, whales in particular, I think, realized that this is a good opportunity to introduce the short squeeze and, blow off the price of Bitcoin in the short term. So at the moment, we are currently in this sort of ambivalent territory for funding rate. What you need to take away from this is that bullish outlook is mostly evaporated. It has mostly evaporated for the time being. On average, both the derivative market and, as you'll see in a moment, the social media or just the crowd have gone from euphoric about Bitcoin to pretty concerned, which, if this isn't like the beginning of the end of the bull market, if we agree that this is sort of a healthy correction, can actually be a fairly good signal. All right, moving on to social data for Bitcoin. So the first thing that I'm going to show is Bitcoin social sentiment. And let me smooth it out a bit. All right. So what you're looking at right now is the average crowd sentiment towards Bitcoin on all of the Twitter channels that we track over the last year. So by average social sentiment, I mean that these sort of spikes into above zero, these are the amount of standard deviations from the mean. These spikes above zero suggest that on average, the sentiment towards Bitcoin on crypto social media is growing and is on average bullish and becomes overwhelmingly bullish at some point. And then on the other hand, the lower that we get in terms of the weighted social sentiment, the more bearish the crowd is on average. So if you look at the last 2 years, you can see that these sort of forays into overwhelmingly bullish sentiment rarely suggest that we are, that there's room to grow. So both of Bitcoin's 2019 tops have had these massive spikes in bullish sentiment. We've had another spike during the May halvening, and really another major spike in bullish sentiment at around the first all-time high, and then more recently, a couple of them. Now, currently, in the last couple of days, as Bitcoin started to correct, we've seen a major drop in the average sentiment towards Bitcoin on crypto social media. And in the past, as you can kind of see here, and as you can see before the correction even started, before the rally even started, in the past, these sort of overwhelmingly bearish undertones on crypto social media suggest that there is room for the price of Bitcoin to recover or grow, depending on where we are in the cycle. Now, it should be noted that we are very early here. So Bitcoin's sentiment has only just dipped into the negative territory for the first time in, well, about a month, right? However, I would keep an eye on this chart, especially if we continue to dip and maybe reach these levels before before the price of Bitcoin actually started to rally, these sort of -1 standard deviation from the mean. We're currently at about -0.4. So as we dip lower into Bitcoin's average social sentiment, what it suggests is that the crowd is overall abandoning hope for a pronounced Bitcoin rally. As a result, in the past, that has been one of the better indicators that there's enough sort of potential for the price to grow in the short term, especially if it coincides with fundamental indicators from Bitcoin's on-chain activity, which we're going to look at the moment. So obviously, none of this should be construed as financial advice. However, we are seeing something that we should expect to see over the last couple of days. We are seeing a major deviation in terms of Bitcoin's derivative data, suggesting that bulls are pretty much, for the time being, relegated to the sidelines. And second of all, we are seeing a major dip in Bitcoin's crowd sentiment, or the mood of the crowd, which has done pretty much a complete 180 in the last 6 days, moving from, let me zoom in here, moving from about 0.8 standard deviation to -0.4 in a week's time. So this is a major drop off. I think the biggest that we've seen since basically Bitcoin started correcting in January, right? I would keep an eye on these two charts. So Bitcoin's funding rate and Bitcoin's social sentiment in the next couple of days. If these two charts continue to decline, and if other on-chain indicators suggest that there's a potential for recovery, we might see an end of a correction. Obviously, none of this is 100%, and none of this should be construed as financial advice. But this is what we have seen in the past for Bitcoin for over the last 2 years. All right. Now, I'm going to move on to on-chain indicators for Bitcoin. Before I do, is Max here? Max Balashevich?
Yes, he's here.
Oh, okay. Hello.
Yes.
Anything that you want to add before we move into on-chain indicators? So as far as Bitcoin's sort of off-chain metrics are concerned, funding rate and crowd sentiment, it seems like we are moving slowly but surely into, on average, a pretty bearish outlook.
I like holistic view, everything in life. So yes, if you want, I can share something, but it's not specifically to some part of the data. Just by saying what people are sharing on social media and checking the price development for the last 2 years, I would say we have more room to fall before they will be more concerned. They're still in the conversation, if I translate it or understand it properly. The language is why the hell they're selling. It can only if we know everyone. If we know that the crypto will be back to new all-time highs, why on the earth you will be selling? It's like they don't even consider the fact that maybe it's the top. That's it. Maybe there will be no. Like there is no even this kind of thought in their heads. It should appear in their heads. Then we can say that because no one knows the future, maybe that's it. So we will not see new all-time highs for the next 3 or 5 years. Everything is possible. Like, I mean, not that this is what I want to say. Actually, I want to say a bit different thing, but you always, the moment you consider this fact, it means you become more rational, and then it's good. It's good for continuing. Or you become more irrational, like you're thinking, okay, we can get all the way down to 5,000, 10,000. Okay, but I don't think we will get so low. So the whole attitude of people who at least talk in social media, it's quite positive in the crowd. So there are, of course, some experts and other people who are like taking profits and they're not afraid of it. But the crowd is positive, and it has to operate one way or another. Maybe they need to switch to another topics and just talk less. Social volume should have to drop significantly. But I think typically is a good cue if we see Bitcoin below 40,000. It's a good cue where they will be like scratching their head and start bringing up the possible reasons why maybe that's the top, or what could be the reason. Then something like this. Ethereum 1,200, good level. Below 1,100 is very good level. It's almost 50% retracement.
Yeah,
that's how it should work, because it's a very volatile market. Like you should experience this kind of 40-50% drop just in a matter of few weeks, without any reasons even. Or on the good news, Ethereum launching layer 2 soon. Optimistics is partially working. New forks, Berlin and London, and Theta in Bitfinex is having settlement. All good news. But no, market goes down. This is how it's supposed to be. And you should find crowd should start looking for reasons why it going down so far. I don't see it yet.
Okay.
And and but it can happen anytime. You know, it's like suddenly can change. The thing is that as we were talking in I think in one of our other talks, I can share just to show a few things, and then you continue with metrics, because metrics are interesting. Yeah, my thoughts are more like generic, and of course I can share our metrics too, but I know you prepared. Let's just bear with me. I think I need to desktop, because it's so you can see my screen, right?
Let's see. Yes.
Okay.
Yep.
So what I show on the screen, if we're retracing the whole move from post-COVID side or the whole COVID side, it's possible. As the way I marked actually is the most likely way.
Wait, Max, 1 sec. I think people aren't seeing your screen.
Okay.
1 sec. Oh no, actually they are. Okay, my bad. Sorry, go ahead.
Yeah. So on the screen, if as a whole move, it can be labeled, and it's quite good. Falls into category of how you would label moves in the wave theory. So the whole thing has to be retraced, and if it's to be retraced, we can go as low as 28,000. So as bad as it sounds, yeah, there is a like a 30% chance we are retracing only this part. Let me show. And keep in mind it's a logarithmic view, yeah, because big move, so it looks a little bit skewed, but because of logarithmic scale. Because without logarithmic, it will look very weird, yeah. So, and then, yeah, then we can, if we retrace only this part, it means that will also be shorter in time, not so long time. Then we will Now the more I look into it, actually looks quite good, because one of the wave, and it's just a 61. Yeah, still we can go as deep as 28,000, but most likely we'll end up 35. Yeah, and in both scenarios, going below this line, 40,000, actually it's a kind of requirement. So I would not touch a market going long before we go below 40,000 unless there are reasons to do so. And the reasons will be, I don't know, some bearish statement and some really negative calls on a Reddit when you see more negative topics, or what you're about to share, this founding rate constantly for some time are negative. Yeah, if you see this, you can go long, but I would wait till we go to 41,000. Yeah, this area, at least 42. Yeah. So it should come. It doesn't matter how you look into these things; it should come so long.
Okay.
Yeah, and Ethereum the same. Sorry for messages on my screen. Yeah. So the Ethereum, actually, wait, I think I have some mark. Yeah. Okay. You can mark the same, and here the same area would be at least, actually we're already almost there, 1,300, but the best 1,200, 900. Yeah, around where my line is, 1,100. This is a good area. You can consider it, but nothing to be think about longs before we go below 1,300. This has to be visited. Yeah, and here's again. Most likely it's like this, but maybe it will be well, going a bit like this. It's possible too. You can mark it like this way too. Yeah, there is a way. And in time, it should take a bit more time. The only way to replace time, it's like to do sharp deep correction. So if we go now in the next few days below 1,000 in Ethereum and 40,000 in Bitcoin, okay, we can cut the time. But typically it should take at least 1 more week. Okay, that's it. Because the other things, maybe I will plug in once we start.
Yeah, for sure.
About yeah. This is what I want to share, because it's like a kind of bigger picture we are covering in our daily talks with you and some other people, but actually I think we did not share it with auditorium long time. Okay.
Thanks, Max. Okay, I think I'm sharing my screen. People should be able to see it. So the moving away from off-chain indicators, which currently, like I mentioned, basically what you... Okay, you don't see my screen. 1 sec. Switch screen or window. How about now? Okay, that's better. All right, so in short, off-chain indicators suggest that we are slowly moving into sort of bearish territory, but we're not like super deep into it. It's just we're starting to dip our toes into it. So like I said, for social sentiment and funding rate, I would prefer to see a bigger drop off in the next couple of days or weeks before I would suggest that there's a major potential for price recovery. Now let's move into on-chain indicators for Bitcoin, because there's quite a few interesting things to keep in mind. We start with exchange inflow, which is the amount of Bitcoin that are moving to known exchange wallets over a certain period of time. So as you can see here, the biggest spike in Bitcoin's exchange inflow, basically in about 3 months, really since the start of the rally, occurred on February 21st, right around the now all-time high. Actually, I think it came a few hours before. No, actually, right on time, right on top there. So this was sort of the first early signal that a lot of people, or a few very wealthy people, are moving their bags to exchanges, presumably to sell and reduce their exposure on the market. And it's pretty clear kind of what happened shortly afterwards. However, and you can see the same thing in Ethereum, by the way, since we're already on the topic of exchange inflow. So Ethereum's biggest exchange inflow spike came a little bit later. There were a few spikes sort of around the all-time high. However, the biggest spike in Ethereum's exchange inflow actually came here before this massive sort of drop, suggesting that a number of holders were now moving Ethereum to exchange, presumably again to sell, take profits. And this is exactly what happened shortly thereafter. Pretty significant correction. Now, moving back to Bitcoin, since the correction, the exchange inflow for Bitcoin has stayed relatively normal, which isn't necessarily, I guess I wouldn't necessarily expect it. So if I look at the last 3 months of data, you can kind of see where we are. Now, obviously, there was a big spike in exchange inflow, a lot of people moving money to exchanges. There were a few lesser spikes, but still prominent when Bitcoin started to correct, suggesting that people were panic selling. You know, people that didn't catch the top were very concerned as it started to drop below 50K. All things that you would expect to see, right? In the past couple of days, however, the exchange inflow data for Bitcoin has largely normalized. And in fact, if you look at the exchange flow balance, which looks at the difference between inflows and outflows of Bitcoin from exchanges, and let me zoom in, you can see that it's mostly sort of gone back, normalized to pre-dump levels. So we actually aren't seeing that big of a reaction just yet in terms of the total amount of Bitcoin that is being moved to exchanges at the moment, right? This particular metric seems to indicate that there's not a wholesale panic among Bitcoin users just yet. We will show in a minute, however, that there are other indicators that might suggest that some people are starting to panic a little bit already. However, in terms of the general sort of network-wide movement of coins, we are not seeing a significant inflow of Bitcoin to exchanges, which might suggest, in turn, that a lot of people are still not too concerned about the correction, right? Which isn't necessarily a great thing. Usually, what you want to see is you want to see something like what happened with Ethereum, I think. So exchange inflow, Ethereum, last week is fine. So you want to see these types of sort of prominent spikes in exchange inflow around local bottom, suggesting that people were in fact scared and flooding out of the coin for the time being. You know, there were paper hands selling off. There were people genuinely, legitimately concerned about the upcoming price potential for the coin. Therefore, you know, buying when there's blood on the streets can be a relatively lucrative strategy, right? For now, we're not seeing any signs of blood on the streets in terms of Bitcoin's exchange inflow data. For now, it's staying relatively normal. There's maybe a bit of a few relatively significant spikes, but if you look at the previous 2 months, it really doesn't seem all that dramatic, especially given Bitcoin's current correction. That being said, there are other metrics that do suggest a bit more concern among some Bitcoin holders. First, I want to look at age consumed. So some of you may know this metric as Coin Days Destroyed. Whatever you know it as, age consumed is a metric that tracks the renewed activity of previously dormant coins. What that means is that when you see a spike in Bitcoin's age consumed, that means that a substantial amount of coins, Bitcoins, units of Bitcoin that have not moved in a relatively significant amount of time are now starting to move on the blockchain once again. Basically means that some hodlers are starting to move their bags on the blockchain. As a result, the reason why a lot of on-chain analysts track this metric is because movement of dormant holders of veteran investors usually tend to indicate points of increased price volatility. Like it's not necessarily either a bottom or a top indicator. It's more an indicator that some amount of volatility might be coming to the price action of the coin because long-term investors are starting to maybe get jittery a little bit. That's why, for example, you see the spike in age consumed right before another sort of move up. Now, more recently, Bitcoin's age consumed has started acting up again, which might indicate that some long-term holders are now, well, it definitely indicates that some long-term holders are moving their bags on the blockchain. We're not necessarily sure exactly where. As you can see, the exchange inflow metrics don't still show that a large amount of Bitcoin is moving to exchanges. However, overall, the trend is that long-term Bitcoin holders seem to be at least now starting to react a little bit more aggressively to the move, right? Now, another metric where you can see this, one sec. this is Bitcoin's network realized profit or loss. What this metric does is it takes the price at which each unit of Bitcoin was last moved, and it assumes that this was its acquisition price. And then it takes the price at which it was now moved, or moved most recently, and it assumes that this is its sell price. So basically, this metric tries to sort of calculate the overall daily ROI across all blockchain transactions. So when you see spikes in network profit loss, it means that on average, all of the coins that are moving on the blockchain at that point in time are doing so at a significant profit. In other words, some profit taking is taking place. Now, obviously, there are some downsides or defects with using network realized profit or loss. The biggest one is that it assumes that all transactions on the blockchain are speculative in nature. There are buys and sells. And that's why it works better for some coins like Bitcoin than for other coins that have a bunch of different use cases like Ethereum. So with that being said, we are seeing once again a significant amount of network profit loss spikes in the past couple of days, which does seem to suggest that people are starting to move their coins at significant profit. Potentially, some people are starting to take profit, reduce their exposure, and start to kind of fat out of the market for the time being. This is if you can look at the last 3 months, for example, this is totally fine. We've seen periods or stretches of profit taking for Bitcoin before in the past, and it usually maybe it impacts the price of the coin in the short term, but not necessarily. It doesn't necessarily sort of put a stop to its price action or price rally. Really, the first time that we've seen a network profit loss stop was here. So after the first all-time high for Bitcoin here, I mean in 2021, the first correction started, and there was a period where network profit loss sort of ground to a halt, suggesting that most Bitcoin on the blockchain weren't being moved at a significant profit, basically suggesting that people weren't starting to take profit and were kind of riding out this correction. And it wasn't until people were starting to fat out and panic sell that we saw another leg up for the top coin. So for the time being, this is not a bad signal. It's maybe an unfortunate signal for Bitcoin's short-term price action, but it does at least suggest that the network is not overvaluing, that the market is not overvaluing Bitcoin, that it's legitimately concerned about its short and mid-term potential, and therefore it's starting to take some money off the table. This obviously seems to be in line with Bitcoin's off-chain indicators, both derivatives data and social data, both of which suggest that people are now starting to look that the outlook is moving more towards bearish on average, right? So what I would look for, especially in days to come, I would look for whether the network profit loss spikes continue, and I would look for a simultaneous spike in Bitcoin's exchange inflow, suggesting that more people are actually now moving Bitcoin to exchanges in order to sell. These are very common. I don't think it's something to necessarily be afraid of. Like Max said, I think, given the price volatility and given these indicators, I wouldn't be surprised if Bitcoin dumped a little bit further. But in general, I think it's better to see these types of sort of fear indicators than not seeing them. Like, for example, just think for yourself, if Bitcoin dumped like 15, 18% now in the last 7 days, and you saw no amount of activity on the blockchain to indicate that people were panicking, right? I think in that case, it would suggest that indeed, market was still very euphoric, extremely confident in the coin's short-term potential, which usually isn't where you want to be buying, right? So although we're not seeing an uptick in Bitcoin's exchange-related data, we are seeing, first of all, long-term holders start to move their bags. And we are seeing a lot of people start to take profits, both of which are common for short-term corrections, right? And are indeed healthy for the markets and the network's general potential for the next couple of weeks and months. So that's another metric that I wanted to show. The last on-chain metric for Bitcoin that I wanted to cover is MVRV. Now, I've been talking about MVRV for Bitcoin for months now. And I've been saying about how it's been overvalued for quite a long time. And if you were just going by MVRV, I think you might have missed a good portion of the rally, because it was such a, even I think, first of all, let me show you. This is MVRV. So MVRV is an indicator that calculates the average profit or loss of a group of addresses, right? So the 30-day MVRV that we're looking at now shows the average profit or the average loss of all addresses that have acquired Bitcoin in the previous 30 days, right? So for example, if I hover here and I see 45%, that means that the average profit of all addresses that have acquired Bitcoin in the past 30 days from January 8th is 45%. They're plus 45% of their initial investment, right? So the idea behind this metric is that the higher the MVRV ratio, the more likely, first of all, the greater the profits, and therefore the more likely it is that people are going to start taking profits off the table, start selling their Bitcoin, reducing their exposure, which could, impact the price of the coin negatively in the short term. And therefore, high MVRV is usually considered a relatively bad sign, or a sign of an overvalued market condition, whereas low MVRVs, especially MVRVs that are below break even, which indicates that people, in this case, short-term holders, are actually below break even on their initial investment, below the 0% mark, suggest on average undervalued conditions, right? So as you can see, let me look at the last year of data. So as you can see, both during the September 1st, after the September 1st correction, and after this Bitcoin drop, since the first all-time high in 2021, we've seen on both occasions, this is obviously a major outlier in Black Thursday, on both occasions, we've seen Bitcoin's short-term MVRV drop to about minus 12%, I want to say. Yeah, about minus 12%. So this indicated that on average, short-term holders were about minus 10 to 12% down on their initial investment, suggesting undervalued conditions. So the way that on-chain analysts use this metric is that the lower the MVRV, the more opportune time it is to accumulate Bitcoin theoretically, right? So this is really the first time in almost a month that we've seen Bitcoin's 30-day MVRV drop to negative territory. Only for a second. It's already up by about 0.4%. But at the very least, it went away from being this massively concerning range of about plus, what is this, 28%, right? Or basically it went from short-term holders being about plus 30% of their initial investment to start the week, to short-term holders being slightly below break even or underwater on their initial investment now, right? So the good thing is that 30-day MVRV is finally starting to normalize, even slightly going into the undervalued territory. It's still too early, I think. If you see another sort of leg down for Bitcoin, you will see Bitcoin's 30-day MVRV start dropping even lower. And if as we go to these levels of minus 9, 10, 11%, it could suggest a potential for a price recovery for BTC. However, this is only the case for Bitcoin's short-term MVRV ratio. So if you look at the long-term holders, if you look at MVRV for the last 365 days, you can see that we're still very sort of overvalued, right? Comparatively. This is the last year. Let me show you the last 2 years. Yeah, we're still high, right? So the average profit of all addresses that have acquired Bitcoin in the last 365 days is 76.3%. So they're plus 76% of their initial investment, which means that there's still a lot of unclaimed profits that they can take if they believe that the market is in danger and if they want to reduce their exposure, which could in turn apply additional sell side pressure, negative price momentum to the coin, right? That being said, at least we are not, we've kind of escaped these double tops in terms of MVRV's latest peaks, and we're slowly moving back to this territory, or Bitcoin's 365-day MVRV, where it was after the January correction. We're not there yet, again. So these are all early signals, but for the first time in about a month, I can, say that at least we aren't super overvalued in terms of Bitcoin's both short-term and long-term MVRV. It's been a long time coming. I honestly thought it would be, the correction would come sooner, just because of the sort of ridiculous precedent that both these spikes in MVRV gave. Because if you look at the last Bitcoin rally in 2019, we didn't, we already overshot it. So I thought, when we came here the second time, I thought that was going to be it. But, we had, it's the bull market. You never know. We had another leg up. Currently, however, we're finally starting to see MVRV move back into where it's supposed to be. It's not there yet. So, don't go and, don't consider this as investment advice that we are currently undervalued or not. But I would keep an eye on these two metrics, 30-day and 365-day MVRV ratio, in the next 2 or 3 weeks. If we see another leg down, I wouldn't be surprised that both of these ratios move into the negative territory, undervalued territory, which could once again suggest an opportune time to accumulate, right? Okay, I think I'm gonna call it there as far as Bitcoin is concerned, unless Max, you have anything. Oh, we need to look at the whales, but before I look at the whales, Max, anything you want to say on what have we just covered?
No, all good, all good. Well, we already prepared today, yeah. So yeah.
Okay. So let's look at the whales. So this is probably the most sort of concerning signal in the short term that I've seen as far as Bitcoin's address behavior. So currently we're looking at the total or combined holdings of all addresses that hold between 1,000 and 10,000 Bitcoin. So basically, millionaires and multimillionaires, and most of the institutionals, I think, also belong in this group. The institutional investors that have arrived into Bitcoin in the last couple of months. So if you look at the 6-month period for these addresses, or the combined balance of these addresses, they've basically accumulated since the start of the rally all the way up to here, February, sort of 5th, 6th, right? The only other period where they sort of had a little bit of a hiccup on the road was here around the January 7th and 8th period, basically the first all-time high, new all-time high for Bitcoin. And then they had another sort of buying the dip period here. They bought all of this correction, this entire correction. And since February 5th, the total amount of Bitcoin held by these addresses has declined by about 150,000. So that's about $7.5 billion, something like that, in Bitcoin, moving away from these addresses in the last 3 weeks. Now, you might think that they just went to even higher holders, right? Or even larger holders. Basically, they went from this group of holders to maybe 10,000 to 100,000 or more. So if we merge all of the groups of holders, so basically now if we look at all of the addresses holding more than 1,000 Bitcoin, you can see the same trend. So overall, the amount of Bitcoin found located in addresses holding more than 1,000 BTC and up is currently in a downfall, right? And this is really the first significant time that we've seen this since the start of the rally. We have also seen an opposite trend in retail Bitcoin holders, right? So they've basically, the first time that they were scared was here, or when Bitcoin was around 13, 15K. They had a period of panicking. They thought that, we reached the top, classic crowd behavior. They started buying around the, all-time high, started buying the dip. And since then, they've basically just continued to accumulate. So addresses holding between 0 to 0.1 BTC, so up to about 25,000 bucks, are currently continuing to accumulate. Now, why am I showing this? Because if we look at what happened around the 2018 top, you might see a similar pattern. So this is the holdings of small retail size Bitcoin investors. And these this is the Coinbase wallet, so I need to actually zoom out of it so you can see. There we go. And let me zoom in here. These are the balances of large Bitcoin holders holding between 1,000 and 10,000 BTC. So you can kind of see the same pattern that we're now slowly starting to see. You see whales starting to reduce their holdings, reduce their exposure, whereas small-sized Bitcoin investors are accumulating even after the all-time high correction, accumulating, into the second top, while most of the whales are already on their way out. So remember this setup. Now let's look at what's going on right now. Okay, I need to zoom in. Okay, so this is what I wanted to show. I wanted to show that even though it's early, a similar pattern is starting to emerge on Bitcoins, on the behavior or the relationship between large Bitcoin addresses and small-sized Bitcoin addresses. One is continuing to accumulate, which is fish, retail, while the other is seemingly starting to offload parts of their bags. All right, so this is probably one of the more concerning indicators that I'm currently tracking. The good news, obviously, is that in the past couple of days, there's at least been a little bit of an uptick in large Bitcoin addresses. But if you're counting on a strong price recovery, I would assume that you're counting on this and additionally, even higher groups of Bitcoin whales starting to, increase their holdings once again. So keep an eye on this and higher groups of Bitcoin holders in the next couple of days to weeks, because if this pattern continues, it might suggest that some institutional investors and large addresses are considering the rally to be over, reducing their exposure, which isn't necessarily going to be great for Bitcoin's sort of midterm potential, right? Okay.
Gino, there is a question in YouTube channel to show this data completely zoomed out. Sure. I guess is on the full screen, and actually also what you said, and also hide sidebars when you're sharing.
So this is for the last 6 months, and all time. This you need to keep in mind that this particular spike is connected to Coinbase wallets. So take it with a grain of salt. It's just Coinbase internal reshuffling, right? Gary, if you want to link to people in chat this chart so that they can look at it real time, that would be great. Okay. So I think that's going to be it as far as Bitcoin is concerned, guys. So to recap, option indicators, funding rate is going down. Crowd sentiment is going down. Both of those suggest that we are slowly entering on average, a bearish outlook for Bitcoin. We're just starting to, so don't get too crazy. But in general, as we see these two off-chain indicators start to decline more and more, it suggests that we are entering an undervalued territory, which in the past has been a fairly good signal for Bitcoin, right? Second thing to keep in mind is that we are now seeing long-term holders start to be more active on the blockchain, start to move their bags. We are seeing signs of strong profit taking around these last couple of days as Bitcoin starts to correct, both of which suggest initial stages of concern among network participants. We are also seeing a significant decline in the amount of Bitcoin being held by large addresses, which is something that we've also seen in 2017 and 2018. Right? Obviously, it doesn't necessarily need to mean that we're going to see the same pattern repeat, but it's at least notable that these addresses that a lot of people think are actually the reason why Bitcoin was rallying all this time are now starting to decline their combined holdings. The only thing that we're still not seeing is really a major inflow of Bitcoin to exchanges just yet. So for now, it seems like, at least according to our data, it seems that most people are still holding on to their bags. And this could also mean that, the spot market is not necessarily actually the market that's making moves and that's dictating the price momentum. It could be mostly, derivatives, because, anybody that's margin trading, it's not going to show up on exchange inflow data for Bitcoin. So that's another thing to keep in mind, that even though we're not seeing a massive spike in exchange inflow for Bitcoin, it doesn't necessarily mean that people aren't, starting to reduce their exposure in BTC. Okay. As I look into Ethereum for a short time, if you have any questions, any specific coins that you want me to look into, me and Max, or before we end the stream, let us know in the comment. I think I've already seen BNB and maybe one other. So if you have any other coins that you want us to look into, let us know in the chat. All right, Ethereum. So, like I said, most of Ethereum's metrics are very similar to Bitcoin, so I'm not going to go too deep into it. I am going to once again show Ethereum's exchange inflow, which, as you can see, had a few massive spikes here. And since then, it's kind of similar to Bitcoin, started to mostly consolidate. What I wanted to show for Ethereum is average fees. So these are average fees on Ethereum in the last 6 months. As you can see, we recently broke all-time high in fees. Average fees, transaction fees on the Ethereum blockchain. For the time being, however, this hasn't impacted the total amount of network activity on Ethereum, which is a bit interesting. But if you look at active addresses, and if you look at transaction volume, and let's take last year. All right, let's first look at active addresses. So the last time that we've seen this rise in fees was during the DeFi summer, right? Uni launch, iFi launch, Comp, Sushi, all of these coins. As fees started to rise in the DeFi summer, the amount of activity on the Ethereum blockchain started to dissipate. Active addresses, as you can see here, took a hard fall in the 2 months as fees started to rise. On the other hand, even though fees are once again not just mirroring summer levels of 2020, but even outshining them, active addresses remain the same. Or they're not dropping, they're not growing either, but they're not declining. So there's same amount of activity on the Ethereum blockchain as it was a month ago, right? And then in terms of transaction volume, or the total amount of Ethereum that is being moved on the blockchain, it's pretty much the same. We've also seen even an uptick in Ethereum's transaction volume here, which makes sense because a lot of people, I think, were moving their bags and selling here. For example, we have this new metric, whale transactions count, which shows the number of transactions transferring more than 100,000 USD worth of Ethereum. So if you look at whale transactions, what do you know? There was a massive spike in whale transactions here on the first bottom, suggesting that, I think there's a same spike in exchange inflow, right? Yeah, it's basically suggesting that a lot of people were very scared about Ethereum and were probably looking to sell for the time being. So for now, at least, the rising fees aren't having a negative effect on the amount of activity on the Ethereum blockchain, which is surprising. But as long as you don't see daily active addresses start to dip massively, I think, at least from a fundamental perspective, from a network activity perspective, Ethereum is doing fine, right? It has the same sort of fear indicators like Bitcoin has, rising exchange inflows, a rising amount of long-term holders moving coins on the blockchain. Network profit loss is spiking, suggesting that people are taking profits. All of those things are happening similar to Bitcoin. However, the total amount of on-chain activity is remaining the same for the time being. So that's another thing that I just wanted to show, because I thought that the fees were going to basically kill Ethereum and Ethereum's on-chain activity, and that in turn was going to tank its price. Hasn't happened yet. For now, it seems like people are more than happy to pay the premium to interact with the Ethereum blockchain. I would assume that that's mostly because of DeFi protocols rather than Ethereum itself. But yeah, for now at least, the amount of on-chain activity on the Ethereum network has not dropped an inch. All right. So I see a few coins that people want us to look into. Obviously, guys, anything that we talk about today, it's mostly going to be, it's mostly going to come down to Bitcoin and, how it dictates the market. And that's why we, spent like 30 minutes today talking about BTC. So I see Band and Link. All right, let's check out Band Protocol, our good friends over at Band.
Dina, if I can add a few words.
Sure.
Because we saw, I think last few weeks, a lot of bashing or negative mood towards Ethereum.
Mm-hmm.
It's not scaling, it's very slow, it's very expensive, and the whole DeFi space migrated to that. So this actually is a good sign, yeah? Because in crypto, you always, the reason I'm saying good sign, the good sign from contrarian, you want to see this kind of things. If you are into some coins. Bad news are better than good news, in a sense. And the whole crypto market now, even stronger than before, divided between there is a Bitcoin, and it pushes because of institutional adoption. And there is another big portion of non-Bitcoin. And when we are talking about Ethereum or now Binance or Links, actually, we should look into the relationship to Bitcoin. It can happen. It can happen during growth stages. At some point of time, this let's call all of the altcoins. Even I don't like this word so much, but for simplicity, can outperform. Yeah, can outperform. But if Bitcoin or the whole crypto market is falling, it doesn't matter. Bitcoin or Binance or Link can do better, but they still keep falling in dollar terms. So keep this in mind for Ethereum. I believe we are close to bottom against Bitcoin. Yeah.
Okay.
I'm not sure if it hit it or about to hit it, but there was visible quite a lot of bashing for Ethereum, and it's always a good sign. Yeah, and the same or similar was bashing against Binance because it's not decentralized. But yeah, we might see increase of altcoins against Bitcoin sooner than later.
Mm-hmm. Okay. Thanks, Max. All right. All right. Let me delete this chart. Let's look at Band. So let's start with off-chain indicators. For starters, let's look at the amount of mentions of Band over time. As you can see, so usually, for those unfamiliar with how this metric works, social volume tracks the total amount of mentions of a particular coin, in this case Band, on over 1,000 different crypto-related social media channels that we track, right? So the higher the social volume, the more people are mentioning this coin that you're looking at, right? So usually what we see during price rallies is we see these types of spikes, suggesting that the crowd is very much aware of the of the rally. They're starting to hype up the coin, and in general, it tends to indicate peak hype when the coin is, pretty much everybody that has wanted to buy in has already bought in. Pretty much everyone is already aware of the rally, and it seems to coincide with a period of price correction for the coin in question. Now, obviously, this isn't necessarily because of the spike in social volume, this latest band downtrend. It's also just because of Bitcoin's moves and the moves that it dictates. But it's not surprising that we would see a massive spike in social volume before Band's correction. If we look at last 6 months, you can kind of see the same sort of spike here before a correction. You can see similar spikes here, as well as here before this slight move. This is actually the biggest one since September, which is interesting in its own. All right. So in general, social volume did suggest that we are a bit overvalued in terms of Band, but it's in the meantime, it has completely normalized, and now it seems like most people aren't really paying attention to Band, at least no more than they usually are, right? So let's look at some exchange, some on-chain metrics for band. So this is the amount of band moving to exchanges, and this is the balance between band moving in and moving out of exchanges. Let me, there we go, and show axis. Okay, actually it's quite noisy, so let me just look at exchange inflow. We don't actually see that much inflow of band to exchanges for the time being. Keep in mind this includes both centralized and decentralized exchanges, and you can kind of choose any specific exchange that you want to look at in terms of how much band is moving in or moving out of those exchanges at any given moment. For now, at least, there doesn't seem to be a whole lot of like increased or additional sell side pressure for band. Not at all, at least in terms of on-chain data. The only one that happened was here around this. So it seems like some people took an opportunity to cash out of band at the first sign of a rally, of an uptick, which, you know, coincided with another sort of period of price correction for the coin. But for now, it doesn't seem like a lot of people are panicking in terms of moving their coins to band. We can also look at daily active deposits. So daily active deposits are addresses that are used to move bands to exchanges. So, you know, before you send your money from your own personal wallet to, let's say, Binance, it first needs to pass through a deposit address before it moves to Binance's, you know, hot or cold storage. So when we track the amount of active deposit addresses, basically we can kind of consider that a proxy for the amount of people that are moving band to exchanges and the amount of sell side pressure, right? And that's why you'll see sometimes these spikes in daily deposits around local tops for band or any coin, because it tends to suggest that a lot of people are starting to move relative to, you know, previous action, are starting to move bands to exchanges, presumably to sell. Since then, however, you know, there hasn't really been so far a big spike in daily deposits either. There's been a relative uptick here on February 20th before this slight correction, but overall, doesn't seem like a lot of people are panicking for the time being. It seems like this is mostly just band, like everything else, doing what Bitcoin orders it to do, right? Let's look at bands each consumed, or the amount of long-term band holders moving their coins. Seems like a similar image. There was one isolated spike here, but overall, I'm not seeing sort of a network-wide effort among the long-term band holders to move their coins on the blockchain. Seems like they're okay with hodling for the time being. Let's look at network profit and loss. Okay, so this is interesting. So this metric, once again, shows the average profit or average loss or total daily ROI of all network transactions. So, for example, on this at this particular moment in time, all coins that were moved on the blockchain at this particular point in time were moved at significant profit on average, right? And then when you look at these sort of dips, it suggests that coins that were moving on the blockchain at these points in time, on average, were doing so at significant or relative loss, right? So it does seem to suggest that over the last 48, 36 hours, there's a lot of coins being moved at a fairly significant loss. So this might suggest that, you know, some band holders are actually looking to get out, especially people that bought here are looking to downsize their altcoin bags and kind of getting out of band for the time being. So if we look at the last 6 months, for example, it's not necessarily too big of a dip relative to what's been going on previously. It's just the beginning, really. Yeah. Overall, I mean, I would assume that this same chart looks. This is what pretty much every altcoin chart looks like right now. Is you know, a lot of people just moving their coins at a loss. There's a fair bit of panic selling at the moment, so you know, nothing too surprising there. All right, let's look at MVRV finally. Where is MVRV? Wait, am I missing MVRV here? Huh. Yeah. Seems like I'm missing MVRV. Let me see if I can find it here. And there we are, MVRV for band. So this is last 2 years. I want to look at maybe last 90 days. Show me 30-day MVRV first and the price of band, and show me the last 6 months. Okay, so as you can see, this is the break-even line. So band is currently short-term band holders or addresses that have acquired band in the past 30 days are currently down about 20%. So they're 0.8. They're down 20% of their initial investment, right? This is the lowest that short-term band holders have been since basically since December 23rd. So the 2-month low in the 30-day MVRV. If you look at the last year of data, it's yeah, it's getting to that sort of local bottom for band's 30-day MVRV, suggesting that we are, more and more moving into the undervalued territory. Again, doesn't necessarily need to mean much, especially when Bitcoin is dictating all of the moves. But indeed, band's short-term holders are currently underwater. Whereas if we look at the 365-day MVRV ratio, and we need to zoom in, they're currently still very high up on their initial investment, so about 250%, which makes sense considering the most of what happened in the last 6 months. So long-term holders are still quite a bit in profit, and there's a lot of band that they can still dump on the market if they believe that altcoins are going to suffer because of Bitcoin's moves. So still, there's a few sort of overvalued conditions or overvalued metrics for band. But overall, I mean, we're seeing pretty much what we're seeing for most altcoins. We're seeing a bit of panic selling, some profit taking, and also people selling at a loss. We're not seeing too much in terms of like exchange inflow or daily deposits, which to me suggests that people that hold band on average aren't necessarily looking at these moves too depressingly or too concerned. They're not too concerned. So yeah, take that with a grain of salt. Like I said, I don't think it's going to, in the short term, I think it's mostly going to come down with whatever Bitcoin does, right? So that's why I think it's most important to look at BTC for the time being. All right, let's look at Link, and we'll call it a day. Seems like I'm a bit dark, so let me turn on my light. There we go. Okay, so Link, right? Okay, now this is something that I would actually expect. And this is what we saw for Ethereum as well, right? And what I like to see for altcoins and their relationship with exchange inflow. So you see this massive spike in the amount of Link moving to exchanges around the local bottom. It suggests basically holder capitulation. It suggests that a lot of people are done with Link for the time being, starting to sell, suggesting an overreaction by the market. There was obviously enough people looking to buy the dip, as it always is with Link, which suggested a period of price recovery for the coin. So that's why I'm saying sometimes that when you see these spikes in exchange inflow, especially when they happen during a downtrend, it isn't necessarily a bad thing. It can very often lead to short-term price recoveries for the coin in question, especially if there's enough sort of people looking to buy the dip on the other side of the trade, right? If we look at Link's daily deposits, yeah, it was fairly high, but Link's deposits were, yeah, consistently high over the past couple of months. So there has been a little bit of an uptick in the Link's deposits around the first sort of bottom here, suggesting that people were looking to cash out. Since then, in the past couple of days, maybe 48 hours, there hasn't been a whole lot of additional sell-side pressure for Chainlink. It seems like some people probably, folks that bought here were looking to cash out, kind of gotten spooked out of the market. Outside of that, there hasn't been a whole lot of additional sell-side pressure. Let's look at age consumed for Chainlink. Now, yeah, age consumed for Link is kind of tricky because it has these sort of upticks every now and again. I think about every month, every week. So I think this is something to do with their actual utility rather than, speculative nature of the coin. So keep these sort of with a grain of salt. I don't think that they're price related. But if we zoom in, you can see that there has been a few sort of, let me change the color. There has been a few spikes in age consumed around the local bottom as well here, suggesting that, people were, in fact, some long-term Chainlink holders were also looking to dump their coins. These spikes are probably actually like protocol related rather than anything that, speculators are doing. As far as general Chainlink activity, though, the amount of addresses, it's starting to dip. This is something that I've noticed over the last 2 weeks or so, that the total amount of addresses interacting with Chainlink is moving back to its sort of late January levels. Now, keep in mind that that is still very high, right? If we look at the last year, for example, yeah, the total amount of addresses interacting with Chainlink is still much higher than it was after and before the DeFi summer. Obviously, this was the DeFi summer, right? That being said, the trend is evident. So the total amount of unique addresses interacting with Chainlink in the last 10 days alone went from about 1,600 to about 10,000. So that's about 6,000 less addresses moving or sending or receiving Link on a daily basis. So slightly concerning, but I think it's early days. I would keep an eye on it as we progress. But in general, what you want to see, especially if you're hoping for strong price recovery, is you want to see the total amount of activity on the network actually mirror that move upward. You want to see that especially as the price is kind of declining or in a downtrend, correcting, you would expect, if the price, in case of strong price recoveries, you would hope for on-chain activity to actually remain stable or even increase, suggesting that people are not moving away from the coin because of its price action, and actually suggesting that a lot of people are staying loyal to the network, and that there is both speculative and utilitarian interest in the coin despite its price correction. For now, we're seeing the opposite for Chainlink, which is slightly concerning, but once again, I think it's probably going to easily jump up once again if there's another leg up for Bitcoin and all of the altcoins, right? So looking at the total transaction volume, yeah, same thing like we saw with Ethereum. I would assume that, yeah. So it seems like a bunch of whales or larger Link addresses were looking to cash out here at the first bottom, similar to what we saw with Ethereum, right? It seems like, I think this was a sort of a massive overreaction by the market. As you can see, it's not just people with a couple of $1,000 in their wallets. It's also large addresses that are more and more concerned about these short-term corrections. So this overreaction, I think, got bought up quite easily. So yeah, whales were also similar to Ethereum. Like if we look at ETH, it's the same thing. Massive spike here around the first bottom, suggesting that some holders were looking to dump their backs, possibly. All right, and finally, actually, let's look at network realized profit or loss first. Yeah, so a massive spike in network profit loss here suggests that whoever, on average, coins that were moved here were moved at a significant profit. So it seems like probably a couple of whales were looking to, close their positions for the time being at a ridiculous profit. But if we zoom in outside of that spike, since then, it's kind of been up and down. There hasn't been too many profit-taking spikes. There has actually been I would say, more coins being moved at a loss rather than a profit. So it seems like people that have bought the tops or near the tops are now starting to feel a little bit of pain, which, while it sucks for them, I think in general is a positive sign for the market sort of midterm potential, right? You need to kind of weed out the weak hands a little bit. And finally, let's look at the MVRV. Oh, nice. Nice. Great. 30-day MVRV for Chainlink is now back into the undervalued territory for the first time since the beginning of the year. If we look at the last year, it's still not like nowhere near the sort of levels that we've seen during the September correction. However, it's at least nice to see that we're no longer in these super overvalued stretches that we've seen for both Bitcoin, Ethereum, and pretty much all of the altcoins in the past month and a half. As far as the long-term Chainlink holders are concerned, they're still quite a bit in profit. So as you can see, the two last sort of spikes in Chainlink's price action occurred when its long-term holders were at around break even. So we've still got ways to go, and that's why I think most coins, their long-term holders are still in quite a bit of profit, and we're not necessarily going to see a major price recovery until they start to feel a bit more pain. But at least once again, it's starting to move back to its early January levels, and it's currently at about plus 60%, where it peaked at about plus 140%. So the average profit of long-term Chainlink holders has definitely declined significantly in the past week or so. It's just that it's still, according to this indicator, we can't call it undervalued based on the amount of profits being held by long-term Chainlink addresses. So, guys, I think that's going to do it for today. Honestly, as far as altcoins are concerned, you would probably be best off currently just checking out Bitcoin and the types of move that it dictates. I think for a lot of alts, we're going to see pretty much the same behavior. We're going to see massive drop-offs in, MVRV. We're going to see spikes in net for profit loss, some profit taking, some spikes in long-term holders starting to panic. But as far as the next week or so, keep an eye on Bitcoin, keep an eye on their whales, keep an eye on the funding rate and crowd sentiment, and keep an eye on the general sort of activity of holders. Are they starting to move their coins to exchanges? Are long-term holders, in terms of age consumed, are long-term holders, Bitcoin holders, starting to act up on the blockchain, or starting to move once again, ending their hibernation? These are the metrics that I would keep an eye on for the next couple of weeks, and especially the relationship between the large Bitcoin addresses, so 1,000 BTC and up, and fish or retail addresses, anything below, let's say, 0.1 to 1 BTC. This is something that we've seen in 2017 and 2018 as well, this sort of divergence between retail holders continuing to accumulate even after the all-time high correction, and then whales starting to reduce their exposure weeks in advance. I'm not saying that that's where we are. It's just something that the charts seem to suggest at the moment. So if you like this type of analysis, guys, and if you found this useful, I strongly suggest checking out app.santiment.net. There's a 2-week trial for everyone that wants to take our metrics for a spin. We've got on-chain, social, and derivative coverage. Well, derivatives data we have for on-chain, for Bitcoin, Ethereum, and XRP, but on-chain and social coverage for all Ethereum-based coins, as well as Bitcoin, Ethereum, XRP, Litecoin, BNB, and a number of different coins as well. So if you want to take your take fundamental analysis for a spin, I think Sandbase is probably the most comprehensive platform around. So check it out, app.santiment.net. Use the promo code TWIC during checkout to get 25% off your first billing cycle, whether that's a yearly or a monthly plan, it doesn't matter. TWIC, which stands for This Week in Crypto, which is the name of this call. So If you found this useful, I suggest also checking out our Discord. The link is in the description of this video. We have our Sandbase Pro group where we chat with our pro subscribers about daily moves of the market and what we're seeing in our metrics. But we also have a few public groups where we kind of answer questions, anything that people want to ask us about metrics, about where we think the market is headed. Feel free to join the discussion. I want to thank Max for sticking by me. I'm sorry for my voice at the beginning. I think I kind of overstrained it a little bit by shouting too much, but it's normalized since I've started drinking tea here. So thank you all for joining, and I'll talk to you all in 7 days.
Thank you. Bye.